Welcome to a CNBC panel special coming to you from our studios here in Kigali, Rwanda. My name is Arnold. Quiz it and now to be part of this conversation, tweet us at CNBC Africa, or you could tag me directly at The Real Quiz it. Now, we have a timely conversation today, and we have a panel of experts who should be able to break this down for us and our viewers. And our conversation today is on the role of digital economy in supporting small, medium enterprises in the region. And just to give you a little bit of context, now the COVID-19 pandemic is forcing most businesses, and here we're talking from retail to manufacturing and service providers, to reevaluate their business models, where the traditional in-person and social setting has previously been the norm. And I don't know if it's yet time to say previously, but now to take it a little bit further, border businesses have been heavily affected, with some of the most affected groups living within their border communities. Now, this panel today will help us break down on how we can solve some of these challenges. Now, introducing our panel of experts, I'll start with Mrs. Sandra Uwera. She is the CEO of the COMESA Business Council. She's speaking to us from Kigali, Rwanda. Mr. George Odiambo, he's the Managing Director of KCB Bank, Rwanda, speaking to us as well from Rwanda's capital, Kigali. And Mr. Michael Awori, the Chief Operational Officer at the Trade and Development Bank, speaking to us from Nairobi, Kenya. Thank you for making the time, lady and gentlemen. Sandra, I want to start with you, that challenge and the impact that the COVID-19 pandemic has had on traders, especially in the border communities. From your research and reports, what has that been like?
Thank you, Arnold. It's a pleasure to be on this panel with my esteemed colleagues as well from the region. As you well know, we've seen significant negative impacts on small and medium enterprises and cross-border traders during the COVID-19 pandemic, most especially due to the unprecedented lockdowns and curfews that have been put in place in very many countries in an effort to curb imports of the COVID-19 pandemic across the borders. This has led to quite a significant increase in illicit trade also across the borders. We've seen a breakdown and a disruption in supply chain management systems across the various borders. And of course, poverty levels have shot up exponentially due to the lack of, the daily substantial financial effort that is brought to the table by this particular market segment. So the challenges are there, but we've also seen very strong efforts from governments and the private sector associations and companies through their corporate social responsibility to try and mitigate some of these issues. But in the same spirit, digitization has come to the fore to guide a lot of the small and medium enterprises on how to access various markets without being physically present. And that's the nature of the discussion that we're having today. We have seen the importance of digital transformation as an obligatory method for doing business here in Africa as we sit.
Sandra seems to have laid the ground, and I hope Michael and George are able to give us solutions. George, bringing you into the conversation, you're a bank that operates in the region, in various countries. It's liquidity movement, especially for some of your clients, many of them being business people and traders. How have they been affected, and what do your books look like in terms of the effect of the pandemic on that trade movement?
Thank you once again, Al, for having me in this conversation. When the pandemic broke up, and mostly from end of Q1 in 2020, when it struck Africa for the first time in a big way, the first victim of business was cross-border trade. And the cross-border trade liquidity movement did not really suffer at the initial point. What suffered was the logistics of moving goods once they're paid for. We did have the technology available for payments cross-border to happen for corporates and SMEs. The real severity came when goods could not cross the borders in the time they used to cross. Some delayed by about a week in crossing the borders, and the supply chain was disrupted in the region for our customers. What we also noticed that the adoption and use of available technology for money transfer services has increased, and the digital economy technology existed before the pandemic. The realization that we could be able to pass this for quick adoption came both as a surprise also to us and also to the customers. The liquidity position of the banks did suffer a dent at the initial stages, but interventions by various government central banks did support banks, and also customers started learning new innovative ways to do business, and also trying to change their models of lesser frequency movements of goods and services to bulking them upfront for the expectation that this pandemic might take longer for them to overcome the challenges in the business. So what we see now in our ecosystem in the banking industry is that the top, that is the corporate, already responded very easily to this, and also the bottom of the pyramid, that is the consumer and the small micro businesses that run by families, also responded very well. The middle, that is the SMEs and the medium sizes, still have a challenge to respond and also catch up with the performance of the businesses.
Michael, bring you into the conversation. You helped facilitate trade, but how has it looked like the past 12 months for most of the institutions that you engage with?
I think I'd just follow on from George's comments in that the pandemic really caused a lot of disruption, certainly from the value chain perspective and the trade cycle perspective. I think one really practical way that the pandemic disrupted trade is, with the movement restrictions, not just the physical movement within the cities, but the closure of ports, airports, seaports. Really, you saw trade ground to a halt, right? If your actual goods couldn't move. And then even as some of those restrictions started to be lifted, we were finding some of our clients were finding shortages or inability to even source containers to put their goods on to have them shipped. So there was really a significant disruption in the physical aspect of trade. And one of the things that comes with that is because trade is so reliant on paper documents, that was another spillover effect as well, right? In that, banks rely on documents to execute trade transactions. And so you saw a backup then in the actual financing of trade finance across the region, certainly, as again, the physical value chains were disrupted. I think one of the things coming out of that is certainly very topical today in terms of the digitization, right? How banks can look to digitize some of these processes and reduce the reliance in paper. And I think for the corporate segments as well, it's looking at the localization, right, of their value chain. Is it possible to source more of your raw materials or intermediate goods locally or regionally, as opposed to much further away, to reduce some of the risk posed to your business by being so reliant on imports from much further regions. So those are a few of the things that we've seen sort of impacting trade over the last 12 months as the pandemic really hit our region.
What could be the solution here for most traders and businesses that ply their trade across the various countries, especially in the eastern southern region? Is there a one-shoe-fits-all solution?
Right. That's an interesting question. I don't think there's a one-shoe-fits-all sort of solution, but I think the topic of digitization, right, and digital financial services is very topical, right? And it's an area that's been growing quite significantly over the last 5-10 years. So if you look at the entire sort of spectrum, right, of financial services, certainly payments, right, is an area that you've seen quite a lot of digitization, and everyone in East Africa is familiar with M-Pesa, sort of synonymous with payments and digital commerce, right? You've seen the growth of digital lending, particularly sort of crowdsourced lending as well, sort of to individuals, but also to corporates. Remittances, you've seen those be growing significantly, and so the diaspora is able to send money to loved ones, and the ability to send this money via digital and mobile channels has increased significantly, and with that has been, the speed certainly, but also the cost has come down significantly. So, in a way, sort of the growth of digital financial services was really, sort of, you could say, purpose built for an environment where social and physical distancing is necessary, right? And one example of that is, for example, governments were able to disperse funds to those in need quickly and efficiently, right? And digital financial services were able to targeted transfers to the most vulnerable. So your unbanked, your women, your informal sector. And again, we saw that here in Kenya with M-Pesa with payments being dispersed by M-Pesa, but even globally, right? We saw it in China as well with consumption coupons were dispersed to populations via Alipay and WePay. Again, households and firms can rapidly access online payments. We saw the transaction fees be reduced to encourage the use of that, and of course remittances. And so digitalization of banking and of finance is something that I think has really picked up with the pandemic and supported, right, being able to comply with the physical and the social distancing measures that are necessary to prevent or slow down the spread of COVID, while enabling, right, the business environment to find a way to adapt, right, to the current situation and still be able to serve their clients, serve their customers, get their goods to market.
So Sandro, bring you back into the conversation. Majority of what Michael is talking about, there's an elephant in the room there, and that is harmonization of legislation across the various member states. Let's say like COMESA that you, whose business council body that you head. Now, are we too slow? And by we, I mean government and policymakers in regards to harmonization, especially at a time like right now, this black swan moment of the COVID-19 pandemic?
Before I respond to that, I think it's also important to, your previous question that touched on, is it a one-size-fits-all for all countries? I think the lessons learned in the past 1 year in 2020 and moving into 2021 is that it is not a one-size-fits-all because of the different variations of our economies. Some countries are smaller, some countries are bigger. Some countries have over 8 border territories surrounding them. Some countries have ports, some countries are landlocked, and some countries are transit territories that assist other countries to receive their essential goods and supplies. So all these dynamics and demographies have actually guided us that you cannot use a one-size-fits-all methodology to deal with the COVID-19 impact, especially when looking at supply chain disruptions across the region. But it is important to have a collaborative effort and a harmonized effort towards providing these solutions that could actually even take businesses from the current situation that they're in to a more evolved, innovative, and unique a platform that helps them to do business better. So just to come back to your question, Arnold, an inclusive digital economy needs to connect the poor and newly banked households to merchants, to schools, to clinics, governments, and employers that they interact with. This is very central as a value proposition in building low-income market segments across the region. I know that KCB Bank has set up digital accounts. I believe this is something that's also being done by so many other banks as well, as a very strong and convenient digital financial management tool to bank the unbanked, to create financial literacy aspects across the board, and also to strengthen the financial pyramid, especially for the bottom, what we call the bottom of the pyramid segment, or the micro, small, and medium enterprise. So by virtue of setting up a legislative harmonized policy and framework across the COMESA member states, we are not necessarily saying that we're reinventing the national policies, but we are actually trying to create a standardized method of encouraging businesses to be able to businesses and companies to be able to integrate together, to create interoperability, to strengthen, also reduce, to strengthen quality of products moving across the region, but also reduce the costs of transactions, digital cross-border transactions for this micro, small, and medium enterprise, so that we can create a value proposition and an incentive for them to trade. Of course, within COMESA, for us, we're looking at increasing intra-Africa trade, beyond what it is today, and especially in the aspects of also promoting African origin goods to move across the markets. Even within this particular pandemic, we see that e-commerce solutions would definitely be able to strengthen this particular dynamics. But we still come back to the aspects that one of the biggest challenges is access to finance. One of the biggest challenges is having strengthened and interoperable digital payment platforms that are speaking to each other, that are low value, that are low cost, that are provided to this particular retail market, and allowing them to also be able to negotiate, to exchange ideas, and also to innovate as much as possible across the market. So governments are aware of this right now. I believe from the past meeting that we had over the past 2 days, we have seen a lot of goodwill, political will, and continuous engagement between central bank governors, ICT regulators, and a varied group of corporate businesses and SMEs, from the mobile network, from mobile network operators to commercial banks, to manufacturers, to fintech companies, to non-bank operators, who are all looking towards the same goal of having harmonized digital common payment policy that can facilitate cross-border trade and facilitate SMEs, micro, small, and medium enterprises across the region. So the effort is there. And as a business council, we are continuing to move forward with this advocacy agenda until we reach our goal.
George, to bring you back into the conversation, you're running an institute, and when you look at some of the points Sandra has raised, MSMEs, which are largely at the bottom of the pyramid, but employed more than 60 to 70% in many of sub-Saharan African economies. How do you get them into the products that you're trying to offer, the digitized products? How do you convince them that this is the way to go?
Yeah, thank you, Arnold. The technology existed, first of all, before I say how we convinced them, pre-pandemic, to have digital transactions prevail in the economy. Upwards of over 75% of the transactions that we perform in Rwanda for KCB already used to happen outside the banking hall. That has moved closer to about 85% by now. And largely this is the case in the region that we operate in, the countries that we operate in. SME customers do not doubt the efficiency gains that digital banking brings to the economy and to themselves. They so well know that it saves their time. They know that it is also improving their physical security of transaction. Of course, it comes with other unintended consequences of online insecurities in terms of transacting. They also are aware very much that this provides them the privacy they so well need. The transaction costs are also low on paper and also on travel. Their bookkeeping efficiencies and reconciliations are also at a better place. They know that the credit history using the data of their digital footprint is also something that the banks can effectively monitor and also give them a fair judgment on assessing their needs. There's also ease of scaling up, because when you also adopt a digital payment systems for SMEs, their customers are not going to be limited by people who can geographically reach them. Their customers could be widespread in far distant places, so ease of scaling up is also there. Offers them a chance to innovatively think of how to reach far and wide with their goods when payment is not an issue to bother them anymore. The research efficiencies for the government and policymakers is also well supported, because there's data that is reliable, there's data that is real time and easy to collect and also to apply. Also, the decisions the businesses make can also be supported by data that is clean, efficiently collected, and they can know where their market strengths are, their shortcomings are, and they work towards also getting a fair playing ground for their businesses. So the issue of having the SMEs across Africa understand and adopt the digital economy has been accelerated by the pandemic. Not that it wasn't happening, it was also happening, but the pace was a bit slower. Pandemic is just an accelerator into this one, and those are some of the positive consequences of a disruption in the world. Once they understand the benefits outweighs the fears, their fears are largely based on cultural issues. People in SME believe in seeing each other, believe in socialization when they do business. It's not just business for transaction, it's also business for relationship that they build their basis on. The issues of incentives by the government, this is an opportunity in tax regime legislation, also in regulation as well, allowing the cross-border transactions to happen, having unified payment systems or payment systems that can be scaled to include other territories as at when the need arises. So there's opportunity for us in the private sector to work with the government and also the market space to see this adoption. I believe in the next few years, this will be a subject that will have been well addressed and it will be the norm. The tax incentive, I keep on saying, is the main opportunity for governments to legislate about so that transactions that are performed digitally or online get lesser and lesser in terms of tax on those ones that are performed physically in large scale transactions of buying equipment, movables or fixed should be encouraged to perform the non-cash.
We are wrapping this up. In your closing remarks, what could be the benefits of digitizing these solutions?
Thank you, Arnold. I think as George and as my colleague Sandra from CBC mentioned, really it's around harnessing the benefits of the technology, right? And ultimately it enables the wider financial ecosystem to deliver really what most of our clients want, right? Better service, faster and cheaper, right? And through harnessing digital technology, we are able to do that in a number of ways across the financial spectrum. And ultimately that leads to better outcomes for our clients and for their clients. And there's various ways to do that. George mentioned quite a number of things that they're doing at the KTB, the commercial retail bank level. For us at TDB, sort of a more wholesale bank, but we also pushing very, very hard into this area. You may have seen we were the first African DFI to execute a transaction on blockchain in 2019. And in 2020, with the pandemic, having that technological background and in result of the physical disruptions that we touched on earlier, that really enabled us to be able to step up and continue to service our clients, despite the fact that, again, airports were closed and the ability to move paper documents was significantly disrupted. So the benefits, I think, are really clear. What's really key, I think, as Sandra mentioned, is getting to a place where we have the digital standards and we have sort of an equal sort of understanding, particularly from a regulatory perspective, to be able to take full advantage of some of these technologies. And so that's some of the things that we're engaging with. I think my final point is, I think this has shown really how vital digital infrastructure is, right? So high quality telecom infrastructure, quality internet connectivity, quality mobile connectivity, and the regulatory frameworks, right? The anti-money laundering frameworks, right? To come along and support these transactions and ensure the security of these transactions. And so I think as we look for more of digitization to expand, I think we also need to keep in mind that we need the safeguards to also expand, to also be keeping pace, particularly to avoid, increasing digital divides. So whether it's, rural, urban, young, old, right? We need to sort of ensure that the inclusiveness remains on top of, again, preventing the fraud and the cyber attacks, et cetera. So the security sort of needs to keep pace with the adoption of digitization. But I think the benefits to the industry are quite clear.
Sandra, in your closing remarks, upsides?
Yes. In my closing remarks, I just want to highlight, Arnold, that 1 in 4 SMEs has embraced modern digital technologies to improve their business operations. And it's important to note this because in addition to engaging and discussing on digital policy harmonization across the board and creating a lot of digital solutions. There is a very strong requirement and need for commercial banks, MNOs, manufacturers, and our businesses to invest in SMEs along the value chain to improve their digital technical capacity and skills so they're able to embrace the new normal that we're moving into today. And this will also strengthen, it's a huge investment from private sector to private sector, because it will also strengthen the cost effectiveness and also the quality of the products that come from these SMEs to the bigger players along the supply chain. And in an effort for Africa to increasingly integrate micro, small, and medium enterprises into the larger supply chain management system that is in Africa, and also strengthen it and make it more competitive against the global markets, it's important that we embrace digitization and digital technology as a tool to strengthen SME operations and also SMEs access to market across the region. So I hope that our engagements with our policymakers, the private sector, does take us towards the direction of improving intra-Africa trade from the current 15% to where we want to go in the future.
And George, as we wrap up, what could be the upside for the banking sector in this?
Well, I share the sentiments, first of all, from Michael and Sandra. And I think also the upside of focusing on SMEs' digital economy, the upside will be protection of the employment and also the protection of the consumer, offering the security to the SME entrepreneurs so that they are able to adopt this in a way that is sustainable, not because there's pressure or disruption. So the upside is that when the world settles and the pandemic is well managed, we will never be the same again. At some level of integration and achievement of adoption has been realized that we'll continue growing. What we look for is to sustaining the momentum that is now very visible in the business environment that we operate in. So I look forward also to seeing Africa integrating internally and also integrating cross-border with each other. We are too fragmented, and that should be also strength in diversity. When we bring up together our different expertise, different experiences, we can only be better as a continent. So the youth of this continent are largely joining entrepreneurship as SMEs, are very well much versed with issues of technology. They are easy to explain to, and they are willing adopters. So the upside is that Africa is rising, and the digital economy in the SMEs space is something that we can expect to grow. So the expectation from the private sector and commercial banking is that we should be prepared to meet the expectations from onboarding to the rest of their lifetime in banking services without necessarily them having to factor distance and movement as a cost to themselves.
Thank you for making the time, ladies and gentlemen. Unfortunately, we have to wrap up this conversation. Now, for our viewers, if you want to be part of this, tweet us at CNBC Africa, or you could tag me directly at The Real Quizzer. Have a great day.